Hello traders, this is Alex. We're going to review the master chart squaring of 9 calculator. This is my tool that I sell. I use it every day, so I didn't create it to sell. It does keep the lights on a little bit, and I do appreciate everybody that has bought it over the last few decades, but we're going to review this master chart squaring of 9. It's a calculator that I've created. I've slimmed it down a lot. Went from 15 megabytes down to under 5, trying to keep it under 5. So I'm tweaking it as I go. So each video will be a little different until I get it complete. They will be for sale on Gumroad. But for those of you who don't know what the square of 9 actually is, let's change the center cell. Again, these are your main inputs, right, that you'll be plugging in. But you can see when I did that, it changed all these. Now this is what you're normally seeing, right? This is the 0 or 1 or whatever in the center cell. Now what that means though, if again, logic carrying forward, these are the even squares, right? 400, 576, these are all 144. These are all the even squares on this angle in opposition or 180 degrees. All these are the odd squares all the way down. So that's significant, right? Then each angle is important off of that, whether it's this way, again, every 45, 1/8, right? That's why you keep everything mathematical when you chart. 2, 4, 8, 16, 32, 64, keep it all mathematical because it's relevant in the square of 9 context. So again, if you put something in the center cell, again, we're going to look at crude oil from this date, but it puts in that number, right? So it's -40, so it goes around and around. Now, just if you're curious, when we get to 0 again, if we plugged in that number, 432, again, with no decimals, I did on this one, again, because decimals, it's a math thing, right? You can add zeros or subtract zeros, and it shouldn't change anything. But it's May 5th. Again, there's the 0. So we get back to 0. That's how long it takes. So pretty interesting, right? I don't know why I'm into that. Sorry, I'm trying to keep it short. So anyway, that's how. And of course, if you plug in this price in the center cell, here it is right there. It does it automatically. These are the even squares in a sense, and these are the odd squares in a sense, and these are the angles coming off of it, branching off of it each direction. It's the same principle, right? So the mathematics still work. And then that's the normal, right? This is what I call the doubler, MC2. It doubles whatever you put in the center cell. So again, I use that. I put in square roots. You can keep it mathematical, right? Or you could do like the speed of the rotation of Mars Jupiter. I mean, I don't care what you plug in there, as long as it makes sense to you. The mathematics will keep the same based on the square of 9. Again, same principle. If you plug in 4.302, which we're going to use in our sample here, that plugs it in the center and goes around and around and around, right? Even squares, odd squares, in a sense. Here is the date we're plugging in, same one as the other one. So again, it's relative, right? That's what you want to keep remembering in the back of your head, and as long as you keep it mathematical. All right, so that's kind of the simplistic, quick version of the square of 9. But first thing you do here is you put in you want to keep it 6 years. Again, because it'll show up here, right? So you want to put 6 years, whatever range you want to use. And I would put it from January to December. This makes logical sense. So, but this is the data point. This was the COVID low, April 2020, a -40 smash, right? So we're going to save that. And that kind of gives, so if you do a lot of data points, you kind of can keep track. And there's a few things that I'll show you here at the end. And then we're just doing one date, so you just click that, run the advanced sort. Now, of course, before you do all that, you should have hit reset, right, and cleared everything out. So if you notice that you got duplicate dates, consistent duplicate dates, you forgot to reset it, right? So that's this button here. I would reset it, as you first get into the program. I forgot to tell you that. Now the doubler is, again, going out. I've already have it programmed in. We're going to go, let me put in a few decimals so you can see it. This is I'm taking the negative 4032 and I'm just putting 4.032. That makes mathematical sense to me. And then again, you should have cleared it. Obviously, I forgot to tell you that. I already did that before I came on. And now we're running those dates. So these are all the dates in there. Now you go to the advanced sort. It also keeps a list here. So now I've just added this button. I used to have all this, and I kind of had to redo it. But this will add these dates into here and then sort them, right? Because you're going to go back and probably look. We're going to go look anyway Once you click it here, it automatically sorts them chronologically. All right, so that's a simple process. Now let's I'll look at the chart real quick, and I will plug these in and be right back at you. Okay, I'm back. I've got a spot crude oil chart, kind of relevant, right? Because we're looked at a spot on the study. So over to the right here are the dates that we're running in 2026. Today is July 20th. It's a Monday at about 8:15 in the morning, 2026. So we're going to run through these. Now, again, there's a lot of times when you're doing historical research like this, you don't know, you know the future, right? Because you can see the chart. So you have to kind of apply uh, an unknown factor, right, until proven. Now, again, we only have one date in here. We have one date on the square of 9, and then we have one date on the doubler. So it's all from the beginning of the same time zone, right? That massive low at negative $40. So again, we don't have a lot of data to work with, but it kind of gives you an idea. Now, my theory is these arrows represent pressure, right? If they're red and the dates pile up on the upside, that means it's pushing pressure down. And if they're, well, again, I'm using green, but that means there's upward pressure. The trend is up, right? And it's pushing it higher. The more dates you have to push. And when there's no dates, I call it a void, and that's kind of important as well. And now, again, with only one data point, we're going to have some voids, but it kind of it'll show you the power of it when we go through it. Now, again, we had this was the day we had two zones in here, and we don't know which way, so it's going to have to prove itself to us. Now we have another date here, so now we know that this date took out this previous high, or something, right? So now we can get rid of these, and we know that the trend is officially pressing to the upside, right? We don't care about if the trend's up or not or down. We're just, again, applying pressure. It's like knowing the potential of electricity, right? Or the flow of water in a river. It's pressing. So we know then that this is up. And again, the next date is, this was the 12th right here. The next date is until February 4th. And you can see that we're applying the pressure. This was the 4th, this was the 3rd. So we had a an inside day and a 2-day pullback, which is a nice break, right? If you're wanting to add, you knew you had a timing coming in here, you had a 2-day break. Pretty standard deal. This one was a 2-day break as well. Well, 1-day break, inside day, outside day, I consider these neutral. But anyway, it was kind of a similar break, right? So if you were super bullish crude for whatever reason, right, we had timing in here. It's just based on one date. So the market paused here longer term. It wasn't just a 2-day break. It's been now, what is that, 10 or whatever, 11. So we had another date in here. It was an outside event, February 17th. Now some of these fall, yeah, that was a weekend one, right? So it could have been either or. Here would have been Friday, and you'd have gone, well, so you would have had it on both sides because you didn't know what it was going to do. You still didn't know here on Monday, but it was an outside event. Now those are neutral to me, right? Those aren't bearish or bullish. A lot of people trade on outside events like they're the gospel. They're just you made a higher high and a lower low, right? The trend is neutral in Gann's world. Okay, so your next day was up, powered up. So to me, you knew then that it was comfortable that this was a place where you could push this arrow. Again, because you're also looking for places to put stops. Now, again, I would still have stops under this. I wouldn't push them up under there quite yet. Now, once you made a new high, that becomes a little different deal. This is February 17th, so the next one is the 27th, which is on a Friday. February. Yeah. So again, you didn't know, right? This was the 27th. Closed, making new highs for the move. Acting strong. Again, a small, little weird break, right? Which is pretty typical for crude. Again, we're looking at a spot chart too. And then it popped higher. Obviously, once it closed up there, we were comfortable putting this arrow as a positive, a green, right? Because again, it popped new highs. So at first thought, this would be, this is definitely a strong area. Until proven, this will be a strong area. Now, the next date is March 6th, so not too far off. And she opened Woody. We're getting into the little war activity. And this was the day. And again, my arrow got so small when it popped up there. But you can see this was the date, right? It just closed on its high. Obviously, we had to put the support here. Let me see if I can make the arrow a little bigger by spreading it out. No. So again, we are obviously, I think as fast as that pop was, I would have been out personally. I've traded enough to, when you get those capitulations, it's Jesus, it's 30, it's a, what is that? That's 81. That's a $40. That's a $40,000 move, man. You're gonna just like let it go? You can't do that. So you'd have been out. I mean, hopefully, you might have been even out right here. So that's good enough. Because again, your risk to reward to your stop area is pretty massive. Let's just assume you got gobs of money and you won't trade that way. You're gonna let it prove it to you. Okay. So we know then this is comfortable. Your stops are good down here now, because this isn't proven yet, right? You don't know if that's a high or low, and then obviously here you go, ooh, it might be close enough to actually be a red arrow here. Okay, this is March 6th. The next one is a Sunday, March 22nd. And this is the 19th. This is the 20th. There's the 22nd. Again, I put it here. It was an outside event. Really, you'd have it on both sides because you don't know where it's going to go. But based on this, it's above this green arrow here, right? And it's actually above this day too. So you had to put it here for now. Well, and that was the correct read. Damn thing. And the next zone is up here. This is just one data point. So now you get too many data points and it really is tough. You got to really filter it logically. Now this is April 6th. And that is Monday. So this was the Friday trade. Closed on its highs. We did not have a big power up. You would assume we would have busted new highs if it was something, at the speed of the angle that we're going up, the aggressiveness. You got to assume that, right? If it doesn't do it, I'd be pretty nervous here, right? In my trading logic, that this day when you didn't know till probably, again, it officially closes at 1:30. So by about noon, you're going, this is a pretty light range. Again, warning bell, secondary high. Again, traded enough bull markets, especially these crude oil pops on, from the Valdez incident to, they're short-lived. I know that. That's my history. I know how they trade. Okay. So we don't know which way it goes. It made another higher high, but still neutral. We still can't put over until probably here. Then I'm comfortable getting rid of that. Once this bar came in, broke the uptrend line, broke a swing. Now it still didn't take out this, but I don't want to have to do it later. All right, so we continue to trend down. Now we have our next date in on April 14th, which is a Tuesday. A lot of your data comes out on a Tuesday, so pretty important day for the crude oil. We've had 1, 2, 3, 4, 5 days down with 2 inside events. So not a big tail there yet, but we're waiting for it to take out this to confirm that. Now, I should have had arrows on both sides. We did not take it out till here, which was April 17th. So pretty interesting, right, on its own merits. So the next date is now, yeah, May 7th will be our next zone. So we got a pretty big, what I call a void. So the market tends to move. Knowing that, right? If I was trading this one data point only, and I know I have a void coming up, right? Almost 3.5 weeks. It can do about anything, right? And this is the tendency. It travels because there's no pressure, right? It's like popping a balloon and the balloon goes squirrely everywhere, right? It just blows up and flies everywhere. That's the similar situation. You don't know. It's like a Scud missile. So anyway, we're coming into this next zone, and it kind of broke trend, made another third attempt high. A lot of times I call these third attempt highs the drowning man high. Usually they're off on their own. They come out of nowhere. It's like the last gasp of a drowning person. They go up and they do all their energy to try to stay above water, then they finally give up and down they go. That's a tendency of what I call the drowning man high. So anyway, here's the May 7th. We don't know which way it's going to go. The next one is the 24th on a Sunday, right? So we got a weekender. And we still don't know. I think you got to leave these until proven. Now, actually, since it did knock this out, I think now we're comfortable getting rid of these. And then obviously this high becomes super important to me. Not this one as much. Well, it is, but obviously we got a new one to focus on. So this 1, 2, we got four highs officially with the extra high. So it makes this pretty strong. It's like a quad bottom or a quad top, right? If it's exact. You always buy if it goes through it, and you always sell if it fails. Even though this is tilted down a little bit, but obviously you can draw a simple trend line, and it's pretty freaking accurate, right? The parallelness and everything. So, I'll get off track here. I got to stay focused. I can talk chart stuff all day, all my experience. So May 27th, we got 31st coming up as our next zone, and again, it fell, broke, took out stuff. So these were logical. Makes this point actually a little more important to me. and it's right at the even 100 mark. You know, stops probably 115 if you got to trade a little tighter. Geez, you know, that's 15 grand right there. So pretty tough on a guy. And the next zone, then you've only traded one data point. Is the 31st. Oh, there was the 31st, yeah, and then the 24th. So we got a big void here. We got another almost 3-weeker. So now, once the market made a new low, then you were comfortable, right? Getting rid of that. Now your stops are up here, or if you've got more money, you'd probably leave them up here. But now we know that this pivot is pretty important, right? Because this was the low, actually, right? It made a 3-day pop. You didn't know any of that, right, when you were here. You just didn't know until you look at the chart. But now we know that once it broke and made a new low, this pivot is now crucial, and you can lower your stops to here. You know, whatever math you use to put your stops in. I never put it in exactly over the high. I usually use 0.5%. Just kind of my rule. Stocks, commodities, cryptos. I use that rule pretty religiously. And you can see we're starting to do we were the greed, we're in the hope, and to me, we're just starting to feel a little fear stage. Uh-oh. I bought the break. I bought the break. I was the break. One of my old traders said that a long time ago. Okay, so we are feeling pressure all the way down. Tremendous drop, almost in half, I believe. Yeah, that's a smash. Let me see. And this is a spot chart. Yeah, 44%. I'm going to leave this up at 50. I'll get rid of this. I didn't mean to bring that one up. Okay, so we found a little bottom. This area got taken out, right? It kind of not, it wasn't on the same day, but it was a day off. So this was pretty important. This is, you know, I would have probably, just in my mind, just assumed it was a piler, even though it wasn't. Now, that's if you're protecting equity, right? You'd put your tight stop in and you would have got stopped out here. Otherwise, your stop's still up over here, right? Because it hasn't proven anything yet. That's why they're still red. Now we're in here, and now we've got one on each side. This is getting close to current. Again, it's January 20th, so we're getting pretty live here. We got the 10th, and then we got the 20th. Here's the 10th over here, Friday, and the 12th is Sunday. So we got 2 of them. Which again, you knew that, right? Coming in, you go, "Ooh, we got 2 of them coming up." It makes you more nervous, right? And probably for me, knowing that there's accumulation coming up, I would have been tightening the stops up. This is there's rules apply to quick advances, you know, so many days in a row, so many closes down in a row. I mean, you have to create your own rule, obviously, because you trade however. Or if you're trading, you know, you switch from a daily to an hourly, right? I mean, something. Once you have these accelerational periods, you know, for every action, there's usually an equal but opposite reaction. So anyway, and then we knew this date was coming in, and obviously it went up, and we've taken out this, so now we can remove that, and we got, let me see, July 10th, Friday, Sunday. So yeah, we can now apply it here. And if you're wanting to buy a dip, right, here was the opportunity. It gave you several things, you know, the small pinching kind of pattern, and draw your trend lines in, broke stuff based on this swing data, again, which is only 1 point. But again, it's relevant because it's the most important low we had ever in the crude oil, a negative 40 freaking dollars. Okay, now we knew we had another zone coming up, and this is actually current. So July 18th is on the weekend, so it's either, and now this is live. It's already open, so we popped up, and it's right here, right? So again, unknown at this point, so you got to leave both these in. We know this is a good area. It's proven, so I think stops here for sure. Now, of course, you can do some other math stuff, but I'm a little concerned that we haven't reached the 50 percentile target. Again, that's pretty normal. Again, I usually do. Again, I'm going to get off track here a little bit. But this 50 percentile, there's ways that you can use it to your advantage. You take these lows or highs. Obviously, the highs are way up there. But this is the pointer at the end of your gun, and you're wanting to see. Yeah, see, it ran out of time. So it's pointing here. This is right in here. So again, maybe it's more bullish, right? And it couldn't get down to the 50 percentile. Only got down to 47. But this is the date. So we're right in the date. Now let me get it exact. I hate being exact. Yeah, right here. So this actually was right here. This was 50 percentile. This was your pointer. And the next one obviously is over here. So you keep going. Once you go beyond the zone, and it's today. So again, using this low, right, because the time was already passed. So again, another important addition to the arrows of the squaring of 9, we have this 50% forecast tool. And guess what? It's 91 calendar days. That's a Gann thing, right? That's your, or the matrix, I call it. This is the 91 market days, excuse me, which is pretty key to me. That's interesting, actually. And the date on the high, I'm giving you, so I'm getting off topic here, but it's pretty important since this is live for those that see it right away. This was March 9th. So now you watch every 9th coming up. This was the 7th. This was the 8th. This was the 9th. So again, you'd have been watching it obviously a few days before. You shouldn't just be that precise. Then you look at the 9th and May 9th. Again, it was kind of in the chop zone. A couple days before was the low. June 9th. That was right here. July 9th right here. Now you also want to, since this was a fast poke, you want to look up April 7th. Now that's a historical data point, right? April 7th of 2025 was that weird ass low that across the sectors. Bitcoin even had a low, stock market had a low. April 7th. Anyway, so you also want to kind of look at that. And of course that gels with what we just looked at. So anyway, interesting, right? But this is one data point. So I kind of stumble around a little bit because I did this real time, but I don't usually edit and delete stuff. But as you can see, again, using this chart, it's even squares, odd squares. These all have a mathematical realm beyond them. Now, just as a future thing, if you happen to purchase this program, I would recommend you can just create a folder, right? And then take all this data that we just ran and take this data and save it into a folder, again, because there's no formulas, and you can kind of do with what you want. Now, if you're going to do multiple dates, I like to keep these ones red, so if I want to get rid of them, I could, just delete them or sort them differently, whatever, right? But you can, let's say you have another date in mind, you run another thing, and you do all this again, and you get this, and you just copy over there. Again, I used to have it so it automatically do all that, but again, the program was 15 megabytes. It took forever. It took 3 minutes to run through the sort. Now it takes a second. So that's the trade-off, right? But you just paste it here again, and you just then you can sort them all, right? You can do your manual sorts. Yeah, you don't need these anymore, obviously, but again, these are no formulas, so you can't really screw it up. Or if you just want to save the data so you don't have to do this again, right? You've already done this data point into the future all the way up to 2030, right? So every year if you're a big crude trader, you just save all your data points by year. You might want to, I would recommend, well, I took the date out, but that's over here. So that's why I like to have multiple backups. You know how much shit I've lost over my decades of trading? Lots. Oh, the computer shut off. No, I forgot to save it. But yeah, then you just make sure you probably label it so you know what data it's coming from. Again, if you don't like something, you can delete it. No big whoop, right? And then you can also, you want to name it. Let's just call it CL for crude oil, so you know your data's in there, right? And if anything that you don't like, you can change colors. You can get rid of anything you don't like. You can put borders around it. Let's say you're putting it in a newsletter or something. You can fancy it up or copy paste wherever you want to go with it. Maybe put it in a Word document, and maybe you just want specific years. Anyway, that's what I recommend, right? Is because then you can add to this and keeps this program from bogging down. If you see multiple dates, you're going to have to hit the reset, and then because it'll clean out everything that's hidden. There's stuff hidden back here that you can't quite see. Okay, I'm going to sign off again. That's one sample of the crude oil. It's about, again, July 20th, 2026 at getting close to about 8:40 in the morning. Everyone have a great year.